A Bitcoin whale dumped 24,000 Bitcoin in a single clip yesterday, causing a sizable market dip down to the mid 110,000s before Bitcoin bounced immediately back. All of this on low liquidity, thin books on a Sunday. Of course, when something like this happens, we need to deeply analyze why it would happen, how somebody could be so stupid as to market sell 24,000 Bitcoin, and if it's a harbinger for things to come for the market. All of this in the context of everything happening in macro. We've got a very special Macro Monday today. We've, of course, got James, Mike, and Dave, but also Lawrence Lepard joining us for a fivesome, not even allowed on most golf courses, but we'll allow it here on Macro Monday. Let's go.
Let's go.
Good morning and happy Macro Monday to those who celebrate. We have a lot to unpack today. Obviously, the Bitcoin price action showing a bit of weakness, dropping below that 112,000 level. Many are watching as a floor for the range that Bitcoin's been traveling in. But of course, we haven't had a chance on Macro Monday yet with our panel of geniuses to talk about the Fed, Jerome Powell, and Jackson Hole. Going to bring them all on right now. We've got Larry, Mike, Dave, and James. Good morning, everybody. You're wondering how we ended up with five. Dave wasn't going to be able to make it. Then he saw a whale dump 24,000 Bitcoin and had to get off of vacation to come discuss it with us. Right. So we'll get into that.
I'm still on the ship.
See,
I'm still on the ship.
Love it. Love the commitment.
The port behind me.
Beautiful. All right, Mike, let's start with the morning meeting. What's happening here? There's actually quite a bit after Jackson Hole.
Yeah, Anna Wong came out pounding hard on Friday. I love comments on Friday afternoons in August. And she said this wasn't a double statement. And it's proving that she was right so far. She reiterated that in the morning meeting. She said almost every time he said a few things that were somewhat double, she passed up or gave a contingent statement otherwise. So looking past those headlines, she thinks we should expect higher rates longer from the Fed. She thinks there's a 50-50 chance they're going to cut 25 basis points at the September meeting. And she says right now her data for CPI, which is early, is not looking good. But he gave the market what it wanted to hear, but keeping it nuanced. So she thinks it was not as dovish as the market feared it was. Michael Casper, our equity strategist, said he's pointed out the key issues for the key misses for the S&P 500 were Walmart and Home Depot. I think that's part of that shifting consumer patterns towards lower cost retailers and things. And of course, a lot of that's showing the issues with tariffs hurting earnings in some of those spaces. Ira Jersey came on. He says the Fed did not shift to focus on inflation as the market had expected, which is what he was part of the reason we got that bounce on Friday. But he came to some key statements. He says we could see more bull steeping. That's his main quote. And his main, I think, thing he pointed out is that I don't think it's going to get much worse. So he didn't think it's got much worse for the long end. You think it's going to be pinned here, but he sees a short end dropping to 3%. That's a pretty substantial move if it happens. I focused on what I think is happening. We're getting towards lower price cures in commodities, the elastic commodities like crude oil, which is dipping this year's low, is right around its break-even cost and the largest producer U.S. So downside is becoming limited and upside spikes will be happening. Same thing in corn, grain, soybeans, and wheat. Getting to those break-even costs in the U.S. Still trending lower, but getting towards a point where responsive buyers are going to be looking for those sharp rallies. This is what you should expect. And then I focus on the world's most significant. Copper. I think copper is a key metal I'm watching right now. If it closes here at 448. It's the highest close ever, despite the world facing this paradigm shift of this world's largest good importer hitting it with tariffs. And then I focus on, they switched over to the most significant bull market in commodities. I think that's gold. To me, gold is just loving Mr. Trump, especially the statement over the weekend that Trump threatens NBC and ABC licenses over news coverage. I mean, gold just loves him, I think. It's just a matter of time that gold breaks above 3,500 an ounce. It goes to 4,000. And I think a key catalyst for that will be the stock market giving back some gains. And a good leader for that is cryptocurrencies, which maybe they're starting now. Back to you.
All right, let's dive right into the market first, and then we'll get into all the macro. So the story that we have here, obviously, by the way, this story is being told in many different ways. So I can only say that somebody sold 24,000 Bitcoin basically all at once on a Sunday in an illiquid thin market. but still holds over 17 billion worth of Bitcoin. This is a big whale. So obviously there's a couple theories here. Dumbass, which I think a lot of people are leaning to, or market manipulation. Dave, I'll go ahead and bring up your tweet here. Either the whale was trying to trigger a liquidation cascade to profit from derivative positions, aka they opened a huge short, crashed the market, closed the short, free money, or they're a moron. You want to go ahead, Dave, because you came all the way back from Europe for this.
Yeah, I haven't been paying attention to the specifics, but here's the deal. So if the person actually sold, there's only three possibilities. There's a third, and it's the first one is the one that people are speculating on the internet, which is the least likely, that this was a whale who sold a bunch of Bitcoin on the theory that they could buy it back lower after they crashed people's confidence. Okay, if you believe that, then I used to live where you could get a glimpse of a bridge in Manhattan. I'd love to sell you that bridge. That's bullshit. It's not what happens anymore. Not the way the market works. Fuck that. Real possibilities. Possibility one, they're dumb. And they called 5 OTC brokers, bid wanted for 24,000 principally to get it done on the wire. And the one, everybody knew that there were 4 others or 5 others that knew about this. And so they rushed to collapse it. And so you had multiple people front running against it, stupid selling, etc. You can contrast that with how Galaxy sold 80,000 and caused less impact than these 24,000. And they used technology specifically designed to minimize market impact, and in fact did it extraordinarily well. Something I know I'm very familiar with, and we can talk about that separately. But I don't need to plug technology. It's very simple. But the most likely scenario is that somebody had established a derivative position where they were short derivatives against their long crypto. They sold a chunk of their long crypto and placed bids well below where they were their average price of selling. So they bought back into derivatives, and now over the next few weeks they'll slowly transition from the derivatives back into the long crypto.
So you're saying they were not necessarily short and taking advantage of a short; they were using it to get a lower bid on longs.
It could have been however you want to look at it, whether it's either, and without knowing all the positions, there are lots of derivative exchanges. Here's the point. There's about 4 to 5x the liquidity on derivative exchanges at any point in time than there is in spot. Yeah. And so it is a lot easier to accumulate a bigger position across Binance, OKX, Bybit, etc. Notice I didn't say hyperliquid. Everyone in the world is staring at hyperliquid, so it's much harder to do this on hyperliquid, which is one of those things that I find
a lot of the coins did go to hyperliquid from what I read. So interestingly, he could be dumb. But yeah, go ahead.
Well, it could be. Maybe they'll figure it out. But whatever. In any event, it is you can cover your tracks a lot easier in all the other big derivative exchanges, and you could do some on hyperliquid and spread that out. And so imagine you're long whatever you're long. You establish a short position against your long of 24,000 coins worth on a bunch of exchanges at whatever the price was. You then start selling. You crash the price from wherever it is, 115 down to 111, 117 down to, it doesn't matter. The average price of selling is going to be around 113, 114, like kind of halfway down after you do this, and yet your bids are likely to get filled at the bottom of the base. So you're going to make the difference between the average sale price and where your terminal price was, where you're likely to be able to buy back and cover your short position. This is a strategy that the SEC would call momentum ignition. I don't know what they call it in Hong Kong, but it is illegal fraud there too. It's legal. It's illegal manipulation in Tokyo. It's illegal manipulation of most exchanges in Europe. In crypto, there's no composite regulator and no cooperation, so you can do it. The last time we saw something as obvious as this, weirdly enough, and here's what I wanted to talk about, was in August of 2023, around August 16th. I can't tell from the charts I was looking at. I need access to my home computer to figure it out, where Bitcoin was knocked from 29 and change down to 26 and change, which in a percentage terms is a very large move. And it happened on a weekend with low volume. It was exactly the same kind of liquidation cascade.
Right here.
And you can look at it and you can see exactly what happened afterwards. It stabilized for a while, kind of flattened down, drifting. Then it started to recover. And when it got back to its initial level a month and a half later, you see what happened. Now, my saying that history is going to repeat, history doesn't repeat, but it does rhyme. And I think that my argument with, and I'd much rather hear Larry, Lawrence and James talk about their thoughts about what Powell said. But my base case is it's going to rhyme rather well to what happened in August of 23. Not just because of technicals, not just because of the reason why, but there's all sorts of rational reasons for it. But I think it's important for people to understand that this stuff still happens in Bitcoin. It is going to shake the confidence of some institutional investors who didn't realize that there was nothing stopping this sort of thing from happening. So, you may see residual effects for days, but in the long run, it's not going to matter a toss. But it is important to call a spade a spade. Okay, that's so my rant for today.
Yeah, I guess the next then natural topic, James, Larry, either you can jump in, is any of the price action right now of any concern to you? Because of course, when you see it drop, regardless of a 24,000 Bitcoin sale or whatever, start to lose key levels. People start saying the top is in, it's all over. We see the narratives, right? So the bull market apparently is over, according to crypto Twitter.
But wait, what is it? It's what day is this? August 25th? Is that right?
Yeah.
Into the depth of
James, you're breaking up.
Yeah, I lost James. James, you went mute?
Audio. Yeah, I think you went mute, James, inadvertently.
Yeah. Now we can't hear you at all. I think your mic switched and it muted you. So we'll try to jump.
I'll pick up for a minute while James is
silent. Larry, and then we'll go. Your eyes are one brain.
Oh, there you go. He's back.
Is that better?
Yeah.
Sorry.
Yeah.
It tried to connect.
Yeah, we got you.
They make all these things so smart that it tried to connect to my iPhone as a microphone.
That's what you want.
Just super helpful, really helpful. Anyway, so stop updating the iPhone. Stop. Anyway, so yeah, I mean, look, we're in the depth of summer. It's August 25th. There's just it's quiet. I don't put a lot of weight on what happens on a Saturday or a Sunday in Bitcoin because yeah, exactly. When people are looking for liquidity, they move out of Bitcoin on the weekend, and I mean it's just it's not the smartest play. Like Dave said, it could have been a two-sided trade. It could have been an unwind of a trade that you didn't see the other side at all in the derivative side, and and that was closed out on the books of a prime broker somewhere. You just don't know. And then so low volume, these moves like this, it doesn't distract me at all. And it's still within a trading range. I've been watching this channel and this there's a channel that you could see in Bitcoin that's going up and to the right, and it's close to the bottom. The bottom of the channel is about a 110, but it's natural. It's a natural grind sideways to me. And after Friday with some, I guess, mixed reviews over what Powell said, and Mike, I read what Anna Wong said, and I typically agree with almost everything she says. I do disagree that he was hawkish. I think that what he was doing is he basically just set it up to say, look, this was his last Fed speech from Jackson Hole, where you're supposed to be relaxed. It's your send off. This is your declaration of victory, right, Larry? So he's gonna declare that they're on the right path. Their policies have been tightening the economy appropriately, and now they can kind of turn their attention away from inflation because we got some positive numbers for inflation outside of that crazy PCE number because of tariffs. He's now saying we're more concerned with the employment side of the equation, and then pretty much taking out the inflation side altogether. But then he continues to hammer on the point that they're data dependent, which gives him cover for the next three prints. We still have a CPI, a PPE, and a PCI number that come out before the next meeting. So he's got cover to change his mind, but basically said all things being equal, there's going to be a rate cut is what I read from it. So, that was, to me, it was pretty dovish in that he didn't come out and say, I'm not going to be bullied by this White House. I'm not going to be told what to do. I'm going to stay the course. We need to keep rates high because the you know, the threat of tariff inflation. He didn't say those things. He basically said, look, we've all but tackled inflation sufficiently here. I'm not worried about it anymore. Now we're worried about employment. So, and that we've all seen is going in the wrong direction, which means rate cut. So that's why the rate cut probability is still at over 80% here for the next meeting. You know, if you look at the WIRP.
Can I ask a question?
Yeah.
I'm curious what you think, and I'm very curious what Larry thinks. There was a lot made of the fact that he sort of backed away from 2% as an official inflation target. Do you make anything out of that?
Well, it's what I just said, is that I think he basically is declaring victory on inflation because it's going the right direction, you know. And do I make? I mean, I tweeted about it last week, and I believe they've been headed in this direction for a long time. Look, why do we even have 2% inflation as a target? Larry, you know the answer. Mike, you know the answer, and you might know it also, Scott. But for the listeners, it is basically it was the Bank of New Zealand that came up with this target back in the 80s, and everybody just kind of jumped on board. Why did they jump on board? Well, because it's what they can get away with. They realize that 2% is kind of that's Goldilocks.
Perfect
like nobody's
number.
going to really miss 2% of purchasing power a year, right? So, why do they even have that? And so to have a hard line. I mean, he was asked about it on 60 Minutes. He was asked about it by Congress, and he has no answer. You know,
his
his answer
really
is
lame.
because it's what it's always been.
Mean, it's what happens to lawyers in a Fed chairman. The guy doesn't even understand the theory behind it. But
right, and so you know, and his answer in Congress became a nonsense, or on 60 Minutes was this answer was completely nonsensical about a neutral rate, and it had nothing to do with the actual inflation rate that they were talking about. But he just talked around in a circle, and like they do, and you know, to avoid the reality that there's no real reason for a 2% inflation rate. It just doesn't make any sense.
Yeah, so, I think the reason he came to that conclusion, sorry, James, I didn't mean to cut you off.
Yeah,
I think the reason he came to that conclusion, or people come to that conclusion, he said something along the lines of the neutral rate may be a bit higher. So I think that kind of led people to think, oh, okay, so he can, you know, he's willing to tolerate a little bit more inflation. But
yeah, but the question was, why 2%?
Yeah,
why
no, I get it.
2%? And there's no reason for it, right? So anyway, so I've been thinking about it a long time. I've been talking about this for a long time. I think they're just going to put it in some sort of range, you know, 2 to 3% range, and that's good enough. Everybody would be happy with that. And you know, talk to a normal person out there who's not all over investments and finance and Bitcoin, and ask them about inflation, and they'll tell you it's necessary. We need it, or else people won't spend money and the economy won't keep going. We need inflation. And so we've been brainwashed and never taught about finance all the way through.
I love that now we get an acceptable level of inflation in inflation, because inflation is so natural. So naturally, we can inflate from 2 to 3% in the acceptable level of inflation. Right. Larry, I would love you to go ahead, Dave.
I just want to make one comment just to tee Mike up for Lawrence, is that the average amount of gold supply mined every year is between 1.5% and 2%. I've always thought that the 2% from the Bank of New Zealand came from them looking at, because they're very resource dependent, came from the gold supply. Which means if you're willing to tolerate an inflation rate over 2%, then you should be buying gold with both fists. Mm-hmm. Now, I personally think digital gold is going to outperform physical gold, so that's a different story, and we can get into that. But that's the reason, in my opinion. You know,
ultimately what they pointed to. Yeah, but the real reason is it's what they can get away with. You know, it's what they can get away with.
Yeah. Well, and the Keynesians have defined it as it's absolutely necessary, or else we're going to fall into some deflationary spiral. I mean, that's in my book. I talk about how Yellen said that, which is just absurd. But to the, are you done, James?
You're up, Larry. We want your time here.
So, well, first of all, on the price drop, you know, to me, it's Christmas in August. I woke up and saw all my limit buy orders at Strike got executed.
I bought 112.
I kind of have a continual, buy stack just down to zero. And so that was pleasant.
Mine only goes to 88 now, but yeah, go ahead.
Yeah, whatever. Regarding Powell, it's just such a word salad. And he's so all over the place. And, he said, the risks to inflation are higher, the risks to, unemployment are higher. I mean, clearly the employment numbers must have shocked him, the revision of the employment numbers, which led to Trump firing the guy who kept the numbers. I don't know. I was conversing with somebody who's very macro savvy. I won't dox him, but it basically said, God, the guy really cowered it out. I mean, I actually called this wrong. I thought he was going to try to be Volcker. I thought he would want his reputation to be, I'm a tough ass, screw all you people. I'm going to be the one, look, everyone on this panel knows that massive inflation is coming. It has to come or the system collapses. We all know that to be true. And I see Mike smiling. He might disagree, but we'll see. It depends on the policy response. I'm pretty sure we know what that is. Basically his stick was, I'm Volcker. I'm going to control this beast. And, I don't give a shit what the markets say. And he just crumped. He just cowered it out and said, well, maybe. And it might have been the two adverse votes. It might have been the fact that they're attacking, Governor Cooks for mortgage fraud, which she committed, it looks like. Who knows what it is? I mean, the bullying is working. And also it might just be the outright data that the employment report came in soft. I mean, my sense is if I'm him, I want to get out of there ASAP, and I want to try and hit the ball in the middle of the fairway and just, get out without a disaster. And so I'd probably follow what the CME Fed odds are doing, and we'll probably get 25 in September, and then we'll wait and see. And maybe we'll get more.
You can pull them up, Scott. They've got the odds.
Maybe we don't, but to me, it's all.
Can I ask one question?
Yeah.
I mean, look, you and I are on the same page on most of this stuff, but when you use the word massive inflation,
yeah,
I think it's exceedingly important to understand what kind of inflation, because the kind of inflation matters. They absolutely have to inflate away the debt, so they need asset inflation,
right,
100%. But they don't want the price of eggs going up.
No, they don't.
And so it's a question of what type of inflation can they engineer, and can they continue to keep the party going in asset prices at these extended levels, which has been Mike's biggest beating of the drum, and the one which I think is accurate, by the way. Right? I mean, to me, that's the issue. I mean, they need long rates to come down. They think that'll create a virtuous circle. I think that's kind of an illusion, but et cetera.
Right.
Because we're still spending plenty. But isn't that the issue?
Well, yes. I mean, there's a lot there. And Besant is selling short and buying long, so he's doing, kind of reverse twist or shadow QE to try and accomplish that. But they also, at a fundamental level, they need G to be bigger than R, which is growth is higher than rates, and they don't have that until they get more money supply growth. And money supply right now apparently is growing about 4.5%. And they're going to have to do a big print to get it to grow more than that. And they're going to do that, or else what Mike fears, which is, the price of everything is going to come down massively when the bubble bursts. And, we are in a bubble, financial bubble driven by all the free money. But the policy response, I'm highly certain, will be, to keep things going. I mean, we've heard it from, Miran and Trump and everybody. I mean, JD Vance, I mean, they get Triffin's dilemma. They know what's going on. And they crumped on Doge, right? I mean, we're going to save 2 trillion, 1 trillion, maybe 300, billion. Whoops, now it's kind of zero. The big beautiful bill comes through, so we're going to spend between 200 and 400 billion more than we thought. Granted, tariff revenues are nice and are really helping out, but even that, I got into a big argument with a lot of people on Twitter that tariffs aren't inflationary, and you're right at a technical macro Austrian point of view. I mean, if you don't increase money supply, it's not inflation, but the fact of the matter is tariffs do make the price of certain things go up, and the price of certain things go up, gets into the CPI. And inflation is a reflexive thing. I mean, inflation occurs when, the price of something goes up, and the person who has to buy it then goes to his employer and says, hey, I'm not making enough money. You got to pay me more. And so the employer says, oh shit, I got to pay you more. And then in turn, I got to charge more. And it's a circle, right? And it's, we saw in the 70s that when you get in one of these things, it's harder than hell to get out of it. And that's where we are. And so, I mean, first of all, the stated inflation numbers, they're just a joke. I mean, is there anyone who really believes inflation is running at 2 or 3%? Not me, not my experience, not my grocery shopping experience, not my car insurance experience, not my home insurance experience. I mean, and I can go down the line. So, I mean, point to the price of something that's gone down, maybe eggs, because there was a shortage of eggs and chickens a while back, and so they've come back down. But so I mean, that's kind of my rant on that.
Larry,
I mean,
Larry,
there will be,
you and I
I
have
think
this.
there will be a lot of inflation. I think people are underestimating just how face peeling it's going to be. I mean, you think the COVID inflation was bad? It's going to get a lot worse, in my opinion.
Over both of our left shoulders is your book, The Big Print. I can see you got 2 copies. They
Thank
can't
you. I
see 'cause it's blurred, but
I
that's
appreciate the
sitting
plug.
literally-
The sales are slowing down.
So
Well, either way, though, that means you inevitably we know what comes next. But yeah, go ahead,
Right.
Mike, jump in.
Let me jump in. I'd like to share a few charts and just kind of, and someone's got to be, you got to disagree a little bit. So let's go short term to long term. Short term right now, I think it's a very likely, in fact, it's almost a done deal. The VIX is going to at least trade 20 or higher before the end of the year. Maybe just trades to stay above 20 is the average this year. Okay, maybe it's going to stay below, but it's the highest in a couple years. And that means Bitcoin is going to get to 100 grand. What really happened Friday was Bitcoin, which made a new low, a new high when the VIX initially made a new low back in early August, did not make a new high Friday, and now it's just tilting back down. I think it goes back to 100 grand, normal reversion in a normal market. And let's just point out the number one thing that's been like the top of the charts for like everything is strategy. Strategy is going to open this morning at 344. That's well below its 200-day moving average. It bounced from on Friday. It got, and just as an ex-trader, I'm okay. You're supposed to buy the first move, but when you get stopped out, you watch out. So strategy might be going below that 200. Just let me finish. I got a rant here. First 200-day moving average in quite a while on the way down. Then it's going to drag everything with it. Bitcoin, S&P 500. It's the same chart. So let's look at some pattern recognition. The last time it did that was very similar to the peak in 2021, and then the attempted a higher high in 2021 later, and then it dropped 80%. Same pattern now. It's below the 200-day moving average. Can easily go back to 100. No position, no bias, observation of the market, what could happen. Then let's just look at the thing about strategy. It's the same chart with the S&P 500, with the 30-year, and with Bitcoin. They're all volatilities, correlations are very high. It's just, you got to look at what the rabbit in the space. Then I look over at gold. I see a nice 5-month bull flag. It's just waiting to break above. You'll get that little pattern, the wait above 3,500. Needs a catalyst to get to 4,000. And what's happening at the same time? You look at the U.S. dollar. This is a trade-weighted broad dollar. It's going down hard. That's great for gold, and what's a good reason for that? This is the S&P 500 versus the rest of the world stock market. Just starting to tilt over a little bit. Now I'll end up with the massive big picture is part of the reason I think we're going to see a normal cycle of deflation following the inflation. We have the most inflated stock market in the U.S. in about 100 years. This is since 1929. And then a great indication was the Bitcoin to gold ratio. It's rode all the way up and it's starting to tilt back down. It's August. It's not supposed to matter much. We're supposed to see the Bitcoin drop to 100 grand and mean nothing. We're supposed to see the VIX go up to 20 and mean nothing. It's what happens after that. So to me, my macro sense is this is the big picture getting started. And when you talk about massive inflation, we already had it, biggest most of our lifetimes, those of us who remember from the 70s. And we learned what that did for the market. It shifted. It helped upseat a president, Biden. It helped the people, another space shift over to a president who realized, oh, the benefit of cryptos helped him get elected. And now we're at the point now things like Bitcoin absolutely have to go up. Things like copper absolutely have to go up. And I look at it as an ex-trader, man, I'll try to buy some puts in those space just for insurance.
Who wants to take it?
I mean, look, you know, you're making the most, it's just an egregious mistake, which is taking Bitcoin as if it's a static asset and not growing. The network in Bitcoin is 8 times stronger today than it was in 2021. So if you value it as a static asset, as if it existed then, the same people, the same audience, the same network effects existed in 2021 as today, then I'd agree with you completely. But that's not the case. It's a growing asset. It's a maturing asset. It's an asset that is still arguably an option on itself. Now, that matters because you could use the exact same analysis could have said post various fits and ties. I mean, in fact, it's one of the things that Tom Lee back in 2009, 10, 11, 12, 13, 14 got right. All the people who said, well, you know, when the market was hated and it was rallying, they're okay, well, this rally is going to fade and it's keep going. And by the way, here we are 15 years later and we're at all-time highs and it really never stopped. And so you can't ignore adoption when it comes to Bitcoin. You just can't. And it does matter because everything you're saying about gold, there are a lot of people today in traditional finance who the same reasons that you say gold should be going up, and I agree with you, are saying, well, yeah, Well, even Ray Dalio said, well, you can choose between gold and Bitcoin. That motivation can't be ignored. Those people didn't exist in 2021. You had Paul Tudor Jones kind of saying, well, maybe it'll be the fastest horse of the race, but everyone else was ignoring it. And it certainly wasn't, it wasn't people like Larry Fink, right? And others, and there are many. So that to me is the main problem I have with your analysis. Everything else I agree with.
Mike, I'm completely with you on a trading basis, and I think your analysis is spot on. And could we have a deflationary impulse before we get the big print and then inflation breaks wide open? I mean, I think, you're a bull on gold, as am I. I mean, I think what's going on is gold is looking around the corner and smelling what has to come next, right? Which is more monetary accommodation. But, I interacted with James this weekend. I mean, I've got my eyes peeled on the chart of Palantir. So if you want to kind of look at the bubble, right, in my opinion, this has the real feel of 2000 to me with Cisco. And, we were just never going to have enough routers, never going to have enough bandwidth. I mean, these things couldn't trade expensive enough. And, as we all know, WorldCom, Nortel, a bunch of other companies went BK. And to me, the capital is being thrown into AI without necessarily a payback on it is pretty substantial. And Palantir is probably the biggest bubble company in terms of multiples in the AI space. And, as a trader, Mike, how does that chart look? So, my sense is that,
that's an island top.
We could have found the pin here, right?
Yeah.
Right. And if it's true that we found the pin, you're right. We get deflation. I mean, there's just no doubt about it. But, what's the policy response to that? Well, that's what gold smells. Right.
That's a beautiful. That's why it looks too easy to just short it right where you put that
right
little
does,
hat,
doesn't it? I mean,
yeah. That's why I get stopped out and then it goes down.
On the gap up, and I felt good for a bunch of days. Of course, now I'm like, fuck. But I'm thinking of reestablishing.
Well, okay, that's support, but yeah.
But that's a key thing to remember about what's happening. This is cryptos are the biggest casino on the planet ever. Every kid in the planet can trade on their phones in a bar, and I remember seeing my kids do that. That was 5 years ago. Yeah. Now that's the key thing. That I also want to point out what Dave said is very profound. He mentioned the name Tom Lee. Tom Lee is a great example of what the problem in those cryptos. People say there's only 21 million bitcoins. Well, now there's 21 million cryptos, and Mr. Lee just tilted over to another one of those 21 million. I didn't say 21,000, and they're growing every day. It's just massive excess supply, excess hubris, and just the example of don't tempt the market gods. And I think that's what's happening now. We get people like him tempting the market gods. When you get that much money and you do that well, you're supposed to say, yeah, thank you. I'm going to go relax a little and buy some T-bills or gold. And that's what I think should be looking now. Again, it's August. It's what's going to matter is the next few months here. If we can get above these levels and not have a normal, like I think we're tilting into a 1929 like market into cryptos. If you read what happened in 29, and I think it's just going to start cascading. Hopefully it doesn't. And the key thing I like to point out is when Dave said how great Bitcoin is, everything is, this is a paradigm shifting year with what's happening, and gold's still winning, and it's starting to break away a little. It's only August. Bitcoin's only up 19%, and that's with the stock market up. I just look at, imagine if we have a stock market down on the year. That is where everything starts tilting, and that's why I think that's the next big trade. At least it's worth trading for, testing for, and that's where what we see today is maybe just a little whiff of that.
I think they can also still afford to have that happen before midterms at this point. So
yeah,
exactly. If you're from him, you want to get it over with really soon.
We thought that
system up.
Make a distinction though between all other crypto and Bitcoin, because they really are two different animals completely.
Well, Tom Lee disagrees with you.
Welcome to Macro Monday, Larry. Welcome. Welcome to Macro Monday, sir.
That's my point. If you're going to mention Tom Lee, that's one example of people saying, look at all the flows into Ethereum ETFs.
That's crypto. I mean, exactly. Bitcoin is digital gold. It is. And, the market hasn't fully figured that out yet.
Mike's
20 million competitors.
But what's funny is if you, so we're very bearish, right? Yeah, everyone's talking bearish. And you look this weekend, and if you compare Solana's price today, and since I own some, I did, to Solana's price a week ago, guess what? Solana's price is 7% higher, 6% higher than it was a week ago. Bitcoin is down like 3 or 4%. It's like these things can move differently, right? And yet today everything in the crypto space is going down. People will go, it's just the way it is in August that things happen. But
you're speaking to Bitcoin dominance, these things which has fallen off a cliff. I mean, this is Bitcoin dominance. But that's
yeah,
what explains it.
it's like
Yeah.
But let's back up.
I agree with Lawrence. I agree with Lawrence. I think you really, really do need to look at Bitcoin differently than the rest of crypto. Otherwise, you basically say Palantir is an equity, and I should trade Microsoft, and I should trade IBM, and I should trade Pfizer the same, that it's competing with Palantir. And
Honestly,
it's true
Dave,
to
for
a
me, I've said it a
degree,
million
but-
times. It's like to me, it's almost like being a huge gold bug and saying that Nvidia is a competitor. I just see them as utterly different asset classes. I know Mike doesn't agree, and I know most people don't agree. Beyond the technology underlying, I don't see that Bitcoin has a competitive asset.
So
Okay.
let's point out, I do agree in many ways, but there's times to get really bullish an asset that's revolutionary. I completely agree with what it's doing with tokenization and everything, or that technology. And that is when Michael Saylor got really bullish in 2020, partly when he admitted, well, his company, software company, is not going to compete with the competitors, might as well tilt to Bitcoin. And there's a time to get bearish, is when all the people I see, like on the screen right now, Bitcoin saying it's going to, Bitcoin is saying it's going to go to 500,000 after it's gone up 10x in the stock market. There's just levels you're supposed to, like I heard a crypto person say this week, and you're supposed to be responding. You know, when people are fearful, you're supposed to be greedy. Well, they're not. They're greedy, so you're supposed to be fearful. So I am very fearful. Honestly, I'm as fearful now as I was in 1999 and 2006. I say 6 because 7 was a bad year for me. And then I saw, and then it all made it all back up. This to me is worse than those periods. It's many X's. And then we also have the rest of the world tilting towards recession. Let's just point about, you're talking about things like money supply and inflation and everything. Right now in China, their money supply is running double the US, around $45 trillion. Yeah, and their debt to GDP is running around 300%, yet PPI is minus 3.6%, and their 10-year needle is 1.77. We've seen this in Japan. It's tilting our way, and the only thing that's holding up is the U.S. stock market, and if cryptos go down, that's the leader, and that's what I'm waiting for, is for a trade right now, maybe a real big trade, and everybody hopes I'm wrong, but I do too, but I'm just pointing out facts of valuations and where things are heading.
Scott, bring up the chart that I just shared. So one of the problems here is that we always revert and default back to the beginning of the year as a measure. And the reason we do that is on Wall Street is because that's when you get paid, from December to December, right? January 1st to December 31st. And everything's reset. You know, company financials are reset. You've got taxes are reset. Everything's reset. But the reality here is our reset this last year was a massive reset in November, from changing out the anti-crypto army into the new administration that is crypto and Bitcoin friendly. So if you're going to look at gold versus Bitcoin, if you're going to look at anything versus Bitcoin, you've got to go back then, because that is really the starting point of the reality around Bitcoin as an emerging asset, and getting some regulation around it. And so it's hard, just comparing from January doesn't make any sense, because Bitcoin had quite a bit of a move before that. So
let's respond to that real quick. From the future, the history, people are going to look back at the Trump administration as 4 years. This is year 1. It's not going to consider those few little months. I'm trying to pick this from the future as a big macro trade, and I don't disagree with you. Some people would call that picking a point in time. Maybe Dave has accused me of that all the time. I'm thinking, but the thing is, what's happened this year is he also has to add into the psychology. This year is a paradigm shift. Just the things you saw on the tape from Mr. Trump this week, and you would have never heard from U.S. president, potentially revoking the licenses of the major network. When I was a kid, that's all we had was 3 networks, rabbit ears. That's a shocker. The world's facing that right now. So looking back from the future, I like to point out this stuff is happening. And I love when Dave points out the accumulation of Bitcoin. I get it. But there's also 21 million, okay, we can call them competitors, wannabes, wildebeests.
No. It's not, wait. It's not the accumulation of Bitcoin. It's the strength of the network.
I get the strength of the network, but then let's talk about financialization. Let's talk about what's going to happen on the open this morning. People are going to be hitting stops in strategy, and everybody knows it's way overweight. It's just for some normalization. So my chart says strategy can easily get to 100, and it doesn't mean it's failing. It just means a normal correction in a rapidly advancing revolutionary technology that does what they always do. They back up. The thing is, this one is linked to the macro. It's linked to the systematic risk of the word treasury and Bitcoin in the same sentence is an oxymoron. I'm going to write about in my book. It's just they're not treasuries. They're highly volatile risk assets. Bitcoin is too, with a high correlation to the stock market. So everything is connected now, worse than maybe in 1929, certainly worse than 1999 and 2006 and 7.
We
some of them are
I
treasuries.
definitely agree with I agree with that on a
wrong.
pullback. If we have an event, when we have the next event, and we've talked about this before, we seem to have a 100-year event every 7 years. When we have our next event, it will draw down. There's no doubt in my mind. But to Larry's point, and in diametrically opposed to what you have expressed you believe thus far, Mike, is that we will respond with liquidity. We will respond with a fire hose of liquidity, a bazooka of money. And that the reason is we have to. And it's in your statement that stock market has to go up. That's right. It has to go up. There's no way. There's no other way. It must.
It pivoted. It pivoted to we will outgrow this, and outgrow means print.
Exactly. So the biggest example of liquidity pump in history was in 1933 when we did base versus gold. That ended everything. I get it, but it took a 90% correction in the stock market and a Great Depression. Let's talk about one bridge at a time. We're not at that bridge, and it's talking about events. We got an event right this morning. The deepest opening on the opening for MicroStrategy below its 200-day moving average in how long? It's these little things as in the strategy. Look for the indications. And the event that happened before, but it's just we haven't seen. Maybe it's the beginning of the tide going out. We'll see who's wearing clothes. My point is, it's nowhere near. It's just getting started. It's August. Let's see how this conversation goes in September, October, November, and maybe we'll be back on the recovery and be fine.
Mike,
again, it's August.
Something interesting. I want to show you something on the MicroStrategy chart, because you're right. This is the 200-day moving average on the daily, but if you go to the weekly, it just this week it hit the 50 for the first time since.
Where's it going to open this morning? So it's going to open at 344.
It opened 340 something. Yeah, it opened.
That's already open, right? Got it.
Exactly, the 340.
Yeah. So I forgot we're open.
I mean, listen, that's a weak chart. Like if you're just objectively looking at it as a chart and none of the other conversation, Mike can make a point there. So
it's just so when you sense, I'm sensing macro big pictures and I'm looking for signals. Again, it's August. Signal right now is kicking in. Maybe we'll just see how it works out. Again, I just point out the biggest risk is when assets have to go up, like Bitcoin and stock market. The risks are they go down.
But Larry, I want to go back to the idea of the big print.
Then Larry's right. But if you're right, then Larry's right. So Bitcoin doesn't have to go up. It's not systemic.
Larry's always right.
The stock market.
Yeah. I've learned something.
Dave, I love you, man.
Let's respond to Dave. Dave, let's respond to that. You said it doesn't have to go up, and you've given me a hard time that you say when I said Bitcoin could lose a zero, it would fail. I don't look at it as a failure. I just look at it as a normal correction and correction. So what if, say, Bitcoin drops 50%? What does that mean for every single asset we're looking at? Bonds, stocks, everything.
Well, I think it's the other way around. I think you're asking the tail to wag the dog.
I'm not, but you made a statement, and it's about why.
No,
it has
what
to go
I
up.
said is the reason the stock market has to go up is the same reason the 10-year can't go. The 10-year yield needs to be flat to down because the government needs to finance, and the stock market needs to be up because the 401ks and retirement accounts and other accounts of Americans are such that the wealth effect is what's been keeping our economy afloat. And and we have a president that looks at it, and the size of the stock market compared to the size of Bitcoin is just dramatically bigger. So, but if the stock market starts to collapse, if there is a systemic event, to think that the plunge protection team will not swing into action, to think that we won't see something like we saw in March during the pandemic, which Larry's called the big print. So let's go with it. That's the big print. And the difference between Larry and you, the single biggest difference is you think that the pandemic print was the biggest print in history. And to quote you, we've learned from our mistakes and we'll never do it again. Larry, what do you think of that statement?
We have not. They just keep getting bigger. Hey, Scott, you should move over to James and his great letter this weekend on credit spreads.
Can you see this? Can you read my mind? It was there.
Yeah, I mean, this was brilliant stuff, and it's really important. People should hear this.
Thank you. Well, I mean, look, the bottom line is we are complacent, like Mike is saying, and this is really important. It's quiet. it's the dead of summer, like we were talking about. Nobody's thinking about these things yet. The credit spreads they're basically, you look at the yields of some of the investment grade treasuries, or investment grade bonds, stuff like Apple and Microsoft and all of those, right? So when you look at those, and Charlie Bilello put out this tweet, and it kind of piqued my interest, because we look at these things and they've gotten so quiet. So if you go down further, Scott, you could see a better chart that, keep going. That's where they are now, the 75 basis points.
Already
right?
on, dudes.
Yeah. And why is it significant right there? So, when spreads blow out, then you do get a correction that Mike is talking about. And this is important. You do get that correction because spreads are indicating that there's trouble, and that you've got companies that have to refinance. You've got companies that are not making the same, they're not making the same returns that they were, because the borrowing costs are higher and all that. Just keep going down, Scott. And the bottom line is, scroll down further, Scott.
Yeah.
So the bottom line is that
this one.
Yeah. So when the Fed raises rates, typically you have your credit spreads widen dramatically soon thereafter, right? And we haven't seen that in this last rate raise. And it goes around to what Dave and Larry are saying, is that the money chasing all of this liquidity out there it's mind-blowing because of the last print. So you have Fed funds rate rising and corporate spreads, meaning that the amount that it costs you, like the yield it costs you to borrow as a company, should be a lot higher than Fed funds, because the Fed funds is the riskless rate, right? And so if you're loaning money to a company like Apple or Microsoft or Facebook, then you ought to be asking for a higher rate than you are for what you're getting from Fed funds or the 2-year Treasury. And typically, when Fed funds rate rises enough, it causes stress in the system, and you get these spreads widen out. But we haven't seen that in this last rate raise. You can see they're all the way to the right. The spreads have gone tighter. So we're tighter than we have been since 1980 something. And this is actually tighter than it was before the great financial crisis. So what Mike is talking about, which we tend to agree on, is that there's a lot of complacency out there. But the reality is that, is it complacency, or is it recognition that the flood is still coming, that we're still going to get liquidity going into the end of this year and into next year, and then we'll have some reckoning? That's the question, is when does the music stop, and when does that white line spike up? Because once those credit spreads are gone, that's it. The market's tumbling. Everything goes with it. And they have to have a big print. And that's the point, is that there's no other choice but to have liquidity come in.
Okay, that's after you cross the bridge of the number one thing keeping everything buoyant. When you get to 2 times GDP, the stock market cap has only happened 2 times, relevant times in history: 1989 in Japan, I was there, and 1929 in the US. The stock market is the economy, and that's where we are now. So I have to keep it lofty, and you look for alternatives. That's why I'm sticking with gold. And at some point, we're going to get some normalization in that. All your spreads will widen up. We'll get that normal recession. That's never going to happen, of course, when people tell me never. And that's what I'm looking for, signals for that to happen. One of the first signals for that happening is the leader of them all, Bitcoin, heading lower. And that's why I'm really worried about MicroStrategy breaking this 200-day moving average.
And to crystallize specifically, Mike, everything you said in the beat before you got to the but, I agree with. I think that Bitcoin and gold will move together ultimately. And there will be lots of other stuff in crypto that are going to be a hell of a lot more like Palantir and the rest of the stock market. And that's where we differ, which is interesting. In a macro show, we're effectively saying that there's an overextension of the macro. The difference is the 3 other people on this panel all think that the government is going to pump. And when they pump, it's going to end up in places that yes, in order to save the stock market, Bitcoin will outperform, gold will outperform. That's what we think. I mean, I don't want to put words in your mouth, but I see James nodding.
And not only that, but also it depends on the event. Like we've talked about this before, is that Silicon Valley Bank collapsed, Bitcoin went up 30%.
Yep.
I mean, there's a reason for that. There was a flight to safety in that moment. That was a flight to safety. And that's the crazy part, is that people are like, well, I need to put my money in something that the government can't touch. They can't seize. They can't, they can't take away from it.
That's what's changed. That's what's specifically and is completely changed. Right now, the appreciation of cryptocurrency and Bitcoin is completely indicative of the success of the Trump administration. That's shifted completely. I loved it, and it was great at 10 grand when the Trump administration hated it, and now they love it, and Mr. Trump Jr. tells you you're supposed to buy it or you're going to feel poor for not buying it. That's the risk, and that's where you just have to put on that spidey senses that Scott talks about. If you made money in a space and it's expensive, do you really want to buy it now? That's why I just point out the risks are inordinate here. Now you're part of that. You're part of the Trump administration. They better succeed, and they better make Bitcoin go higher. Good luck with that one. I liked it better when everybody hated it.
Yeah, the Bitcoin is so much bigger than Bitcoin is so much bigger than the Trump administration. It's the U.S. dollar over Bitcoin is the price everybody quotes. But go look at Bitcoin against all the other currencies in the world. I mean, it's not isolated, and it does help to have regulation here because we are the biggest market. We are the financial driver, and it is getting into institutions now because of the regulation. But the stablecoin bill is going to be a really big driver as well. And so it's not just the Trump administration; it's the removal of the anti-Bitcoin administration that was important. So it's not that Trump is pumping it; it's that we've removed that headwind of Elizabeth Warren and her psychotic anti-crypto army. That's what we did.
They could be back. They could be back
in 4 years,
14 months.
They could.
Well, no, but I mean, if the Senate goes blue, Elizabeth Warren's the chair of the Senate Finance Committee in a year, less than a year and a half.
That's a horrible thought.
That happens. Yeah.
So what's tilt over to what you mentioned, and I have to point out, the great equalizer in all markets is gold. Unfortunately, it's a stupid rock. I hate when I have to point out it's the same. It's a flatline. The stock market's flatline and a total return for almost 8 years. And I've been watching this for literally a decade. The Bitcoin to gold ratio, certainly when it first stayed above 1 beginning in 2017. It's been flatline versus Bitcoin since 2021, and I say that deliberately because I know it's going to tee off Dave, but it's my pattern recognition force ideal. So I look at this and I say, this is not good. This is showing me there's a problem. Right now it's 33. The high when Trump first got elected was 40. The low for the year is 25. Just afraid it's going to trade like a commodity normally does. And the green things that you learn in commodities, particularly when there's massive excess supply of competitors, is autocorrelation. And to me, autocorrelation risks are still down for the Bitcoin to gold ratio. They'll get back towards 25 rather.
In a growing
when Trump
network,
was elected, we were at like 75.
It is not a commodity.
Yeah, there was no 25 since Trump got elected in this cycle.
The Bitcoin to gold ratio right now is 33. I can share screen if you want to put it on. You can see it right now.
Sure.
It's 33.
But
it's 33. The low after he got elected was 25. The high when he got elected was 40. The low was 25. Good support. My fear is it's going to do what a normal commodity does. I see an autocorrelated market here, and I have good reasons for that. I think it's going to go back to 25. I say that about other commodities, and it's just when people get bullish at these levels, you're supposed to be bearish, and when they get bearish at these levels, you're supposed to get bullish. It's not that easy, but it just looks to me that's what we're doing.
Like it might, but someday it's going to break 40.
Well, I appreciate your view on that. Maybe someday, but it could actually get down to 10 first. That's my point. And what commodities usually work, and that's my point, is this is what I think is going to happen. I think it's more likely to get down to 10 or maybe even 5. You get your pump, and then you might get to 40. That's the thing. You need something to get the pump. And the number one way to really get a pump, other than some kind of event that can start, is just the risk assets to capitulation. That's what happened in 1929. That's what happened in 1989 when risk assets get really expensive and they just start going down in their own momentum. Maybe that's
happened in 2020.
James and my partner David Foley has a brilliant chart which I can't pull up right now because I don't have access to it, but it basically showed Bitcoin and gold and how they're correlated. And what tends to happen is gold moves first. Gold smells it first, and then Bitcoin follows. So if you're bullish gold going through 4,000, which I am, I think gold's on its way to 5 or 10. You should be massively bullish Bitcoin. because gold is more widely distributed and it just smells it. It smells the debasement that's absolutely certain to come because of the mathematical situation that we find ourselves in. That's how
But
I
one
see
big
it.
difference is Bitcoin's risk on, gold's risk off.
Well, yes and no. I mean, that's slowly shifting.
If you drive a car using a rear view mirror, you're right.
So that's why I appreciate your views. And I've been pointing that I wrote about this years ago, and I really thought Bitcoin was going to trade more like treasury bonds and gold. And then we got this situation that kicked in, and now you can just see the correlations are continuing to increase with the stock market. That's great. It's wonderful.
I'm not so sure that's true. I'm not.
It's a fact. I mean, I can show you the correlations. I mean, how far do you want to go back? 100 days? 100-day correlation to S&P Bitcoin correlation is about 0.65, 0.67. 100-day correlation S&P
Okay,
Bitcoin.
so how does the 100 compare to like
the
the 900 day? I mean, I'm guessing it's lower today than it was 3 years ago, correct?
It's okay. That's
I
just
don't have
past
the data in front
measure.
of me. I'm just
It's
guessing.
past measure, and I
know the
respect
correlation's breaking down over time, in my view. From what I've seen.
So what's happening so far this year? The low for the year in the VIX was in April. That's the day that Bitcoin. I'm sorry. The low for the year in Bitcoin was in April, the day the VIX printed the high. The high and the low for the high for Bitcoin was a week or two ago when the VIX printed a low. Now that's just started to diverge. That's a complete inverse correlation with the VIX Bitcoin so far this year.
Yeah. Okay.
Larry, we got a couple minutes left. You're the guest. I mean, you get the big final conclusion.
I don't have any great insights. I mean, a lot of great stuff out of these guys. We'll see what's happening. I mean, let me say a couple things. I think the next couple of quarters are going to be a real freak show. I mean, it's buckle up. It feels to me like I don't think Powell's going to get out of here unscathed. He's hoping that the end of May comes quickly. Sorry, dude. You're not going to be lucky. I think. The fall is typically a pretty rough period for the markets. Stock market, I think Palantir might have just found a pen. I think the whole, song and dance that the administration has done is getting a little bit old and tired. And my sense is that, if the economy does slow down, and the cuts will. I mean, one thing is for sure is we know when the cuts actually start to happen rapidly and aggressively, it's over. I mean, at the peak in 2007 or 8, they cut like crazy. Didn't matter. Same thing's true in 2020. Didn't matter. So, in a sense, you almost don't want the cuts. I mean, and George Gammon and others have made the argument that the cuts will actually drive it down lower. I mean, it's a complicated argument, but there's some logic behind it actually. So we'll have to see what happens. But I think we're going to see a freak show in the next 2 quarters, and I would just say buckle up. And I think everyone who's long gold and Bitcoin, I mean, you got to be ready to ride this out. We don't know what's going to happen, but as I wrote a book about it, my strong belief is that we know how this ends, and it ends with them saving the financial system because they have no other choice. The alternative, just like when Hank Paulson was on his knees begging to Nancy Pelosi to pass TARP, the alternative is the whole thing freezes up. That's why they broke the law and bailed out Silicon Valley Bank. They literally broke the law. I mean, Dodd-Frank said, no, thou shalt not do that. And then they relied on the systemic exemption clause to, they knew the whole thing might go down if they didn't. And so they did. And that's what will happen again. So it's tiresome. I mean, this is such an obvious pattern. We know where this is going. All roads lead to inflation. So, it's pretty simple what to buy. I mean, you just buy gold, buy Bitcoin, and go to the beach.
I just think it's really
That's
interesting.
what
My take on this, Scott.
But you could both be right because you could have the deflation that leads to the inflation, as we said.
Well,
before,
that's right.
And everybody's
That's right. Which means, just for those who think that, be very careful with leverage.
Yes, totally agree, Dave. Totally agree.
That may be the single most important point here because it is entirely possible that you'll look back 3 years from now and have been completely right if you're a Bitcoiner and Bitcoin is way higher than it is today. But in the interim, you get stopped out of your position and you say, and you'll be like beating your head against a wall.
Completely
that is
true.
And
there's an argument for you to have there's definitely an argument for you to have some powder. And I don't disagree with Mike on that. I just think that timing this thing and the fact that they have not learned their lesson. They've not learned their lesson. They need more. We need more cowbell. We need more cowbell. And so they're going to print
cowbell's coming.
liquidity.
Yeah.
So here's the thing: is that the market was really worried about. They've been worried about a few comments from Powell over the last number of years, and those comments will boil down to number one: we worry more about being too easy than we do being too hawkish, right? Being too loose and we're dovish and being too hawkish. Why? Because he said these words, we have tools to deal with that. If we over tighten, we have tools to deal with that. So the market's like, oh God, they're going to push us into, a downturn because they want to flood.
Tools equals printer. Right?
Means a money printer, more liquidity. That's number one. The second statement they worry about is that he said that we're data dependent. This is a statement he said over and over and over and over and over and over and over again. So they worry that they're going to wait for the data to turn, which is lagging. The data is severely lagging. It's also, flawed. So as we've talked about with the CPI and all the other stuff, it's flawed data. It's lagging data. The Fed is lagging the lag, right? So by the time you even get this unemployment rate, that's the real unemployment rate that doesn't get revised, even though the jobs do, they don't revise the unemployment rate. So you're staring down something that happens really quickly, too late. And that's what the market has been worried about. So why the market was up on Friday, they got a hint of a little bit of oxygen that Powell said, all right, maybe we can cut 25. We won't cut 50 yet. We're going to cut 25 and see what happens. And so that's positive news for the market, because what they don't want is for the Fed to strangle it like they usually do. And that's why when Larry said that when they start cutting fast and furious, it's already too late. And so the market is trying to, is hoping that's not going to be the case.
Listen, as we come to the end here, I want to parrot a point that Dave has said multiple times on Crypto Town Hall that I don't know has been said here. It's funny that we discuss this every single day, wondering if we'll get rate cuts, if they'll do it in September. As Bitcoiners, we all zoom out, right? And we look at the long term. We literally know exactly what's happening when Powell leaves. Whether they come in September or November or January, massive cuts are coming. There will be a stooge at the head of the Fed who is going to do exactly what Trump is asking him to do. Rate cuts are coming. It's coming. They're saying it's coming.
Printers
and May's not that far away.
Yes. No, we can just give China as an example. They're massively stimulating their economy only because the stock market dropped 50% and still experiencing deflation. Good luck. Maybe we'll get out of this without that, but there's precedent for it.
Yeah,
right. But you can have deflating economy and an inflating currency at the same time.
Well, that's right. They're buying their stocks like Japan did. So maybe at some point we'll get to that. But what you have to do to get there first, you have to have the pain. And that's what I'm worried about. Dave mentioned. I come from a leverage background. I came from futures, 21 leverage. You get people stop out. And then you get the print. But I'm worried about the big stop before the big print. There we go. Maybe that'll be our book, Larry. The big stop before the big print.
A lot of people.
There you go. The big stop.
But it sounds like as much as everybody believes Bitcoin's going up, there's kind of, when Larry, I hear you talk about the next few quarters, it could become extremely volatile again, and you could get to buy Bitcoin much lower before it goes much higher.
You might. I wouldn't count on it though.
Either.
Just
sustained bid.
You got to be prepared for everything. Is the point I think Dave's making on the leverage front. It's a great point. I've seen people get blown on leverage. It's horrible.
Yeah,
this is a fourth turning. We have no idea what's going to happen. Prepare for anything.
We do know one thing, Scott. I just put it up.
What's that? Yeah, we do know that.
That should be your background.
It may not be Powell. It's somebody else that brings it.
I can hear my internet frizzing. So since you can see we're moving down the river, I don't know if you can see behind me.
It's going to be Powell's successor, possibly.
We're heading to Vienna. So,
well, Dave, you enjoy Vienna. The rest of you, this was a lot of fun with five
guys,
people.
thanks for having me on. It was really great to be with you. A lot of great minds here.
Thanks.
Yeah, and final words. Buy Larry's book now. That's all I got. Oh, and sign up to James's newsletter.
Thank you.
Cool. Okay, good. I shilled. There we go. See you guys next week.